Today we're going to go over some concepts regarding to the internal control in cash. And the first example we're going to take you over is doing a bank reconciliation and some adjusting entries regarding to Dexter Company. Before we talk about the bank reconciliation, I would just like to introduce a few concepts about bank reconciliation. Normally, when we talk about bank reconciliation, we are basically trying to reconcile the balances between the bank and what we have recorded in the book. Normally, we are trying to reconcile any differences that the bank may have recorded, but the book hasn't been recorded. And then we'll also take a look at what the book may have recorded and the bank has not yet been accounted for. So some of these differences could easily be identified as follows. If you take a look at from the bank balance and compare to the book balance, you would find that most of the differences, when you talk about the reconciling differences from the book, is usually coming from a few different areas. Things that are usually kept in a book but not in the bank could include things like the checks that might be deposited and they are in transit. So normally when we do the bank reconciliation, we will have to add those differences back into the accounts. And some of the very common differences that you would find also from the bank side that's in the book side but not on the bank side will also be things that are checks that might be issued that have not cleared through the bank. So there could be some outstanding checks which we will need to usually correct. And then you would then come up with the balance. On the book balance side, we normally would account for things like that are usually in the bank but not in the book. So some of the common examples could be a deposit or maybe like an electronic deposit that the bank may have accounted for, but the book has not yet been recorded. So normally we would have to adjust it by adding that to the book balance. And some of the other reconciling differences could be sometimes the customer may be sending a check that's being bounced by the bank. We call it the NSF check because there's not sufficient funds in the bank from the customer to cover those accounts. And if this is the case, we have to take it off the book again from our cash record. Another possible situation could be that there could be bank charges that might be charged in the bank but not recorded in the book. In that case, we have to take that off the book from the cash account as well. And potentially there could be some error that could have been recorded wrongly in the book that needs to be adjusted as well. So the error can actually go either way. It can be increasing the cash in the book or decreasing the cash in the book. And then you come up with the adjusted balance from the book side. So if you take a look at those, at the end of the day, they should both be balancing out. And in this case, we have reconciled the bank reconciliation. So I would like to take up an exercise with you on this particular case, taking a look at the situation at the Dexter Company. So in this particular question, we have provided you with a schedule that identifies what has been cleared through the bank on this side of the table. And over here, we have talked about what checks have been issued by the company, what actually deposits have been made by the company. And by looking at it, then we can take a look at what would be the potential deposit in transit that we needed to account for in doing the bank reconciliation. So why don't we just tackle the first part of this question to start with. So they're saying on June 30th, 2013, they said the bank reconciliation of Dexter Company shows a deposit transit of $28.74. So this means that this is the amount of the deposit that has not been recorded at the end of June 2013. Then they show you a bunch of deposits that went through the bank in the month of July. And they also give you what are the deposits that are processed from the book's perspective during the month of July. So the question is asking you that list the deposits that are in transit at the end of July 2013, and then identify if there's any other reconciling items that may have an impact to the bank reconciliations. So if we can just go back to the calculation here. So this is the schedule that we have just seen earlier. So this is the amount of deposit that was actually recorded by the bank. And this is what we have gone through the book. So we needed to cross-check that to make sure that whatever that gone through the bank has actually been recorded in the book as well. So we can take a look at, so the 2874 that are outstanding from last month now has now been cleared through the bank. So just go down the list. On July the 8th, the deposit of $4,500 has also been going through the bank here. And the 6436 for the July 15th deposit also gone through the bank as well. The 1908 has also, the 6436 on the deposit on the 16th that were being recorded in the bank has been gone through from the book as well here. And then the 1908 has also been cleared through the bank. And then the 3062 has been gone through as well through the bank here. I'm just going to cross these out. Okay, so basically speaking, if we take a look at the outstanding check here, then we have still got the deposit on July 31st of $37.84 that has not been accounted for, and also that we also have a collection from the customer that are actually electronically done by the bank that we have not accounted in the book. So to answer the question here that they ask you in the first question, which is list the deposit that are in transit. So the deposit are in transit would be the deposit that was being made on July 31st for $37.84. And the other item that needs to be attended for is the fact that there is an electronic payment in the bank that has been collected by the bank that also need to be accounted for from the book. Okay, so if we can just go back to the question again. So the second part of the question, they have given it to you here, is that on June 30th, the bank reconciliation shows that there are 3 outstanding checks. So at the end of last month, there are 3 outstanding checks that have not been accounted for, which is check number 154, 155, and 157. So they also give you, again, what has gone through in the bank from the bank statement, what checks have been cleared through the bank, and they have also accounted for the ones that are actually being issued by the company from the company's record. So the additional information they gave it to you is the fact that the bank did not make any errors. The company did make one error. So in our reconciliation, we've got to watch out for that error. So the question is asking you that to list any outstanding checks at the July 31st, and also list any other items that must be included in the bank reconciliation, and what is the impact to the bank reconciliation. So we can go back up here and take a look at the difference of the two. So these are the checks that have been outstanding since last month, and these are the checks that are written by the company this month. So again, we would do a quick reconciliation to find out what has cleared through the bank. So we have got the check 154 of 1120 has now gone clear through the bank. So we can just mark it off here very quickly. And then check 157 has cleared through the bank again here. So we can again mark it through very quickly here. And check 158. Check 159 for $550. Check 160 has also cleared through the bank here. And check 163. Now for check 163 here, basically speaking, what we have done is the fact that the bank is clear through for 1680, but the company has only recorded the check as only 880, so there's actually an error here. So I'm going to put a note here that we have to account for this error. But technically speaking, even though that has been cleared through the bank, what we have to do an adjustment to correct this error that was actually recorded. And then we also have check 162. They have actually cleared through the bank as well. So basically, the outstanding checks that have not cleared through the bank is check 155, check 161, and check 164. So to answer the questions here regarding to the part 2 of the question here. So the checks, the outstanding checks at the end of July 31st, 2013 would include check number 155 in the amount of $1,600. And it would also include check number, as we've seen earlier here, 161 and check number 164. And the amount for those checks are $1,734 and also $1,300. $1,734 and $1,300. So the total amount of outstanding checks at the end of the period adds up to be $4,634. And then the other items that we need to pay attention in this case is the fact that the bank has also recorded a service charge that also have to be accounted in the book here. So the service charge is $108. And also there's an error in recording check number 163 because we recorded 880, but the bank has cleared through as 1680. So there's a difference of $800 that needs to be deducted from the bank. in the book, actually, I should say. Okay, so if we can just quickly take a look at the question again here. So in this question here, the last part of the question is they have asked you to prepare a bank reconciliations on July 31st, and they also ask you to do any adjusting entries that are required from the reconciliation, assuming that the EFT collection from a customer on July 26 shown has not yet been recorded. So now we have to do a bank reconciliation based on the information that we have prepared earlier. So again, to do the bank reconciliation, we usually would account for the reconciliation in two different parts. So one is basically the balance from the book, and one is the difference is the record coming from the bank. So let's put down is for the Dexter Company. It's for the bank reconciliation. And it is for the period of July 31st, 2013. So we're going to go down here, cash balance per bank statement. And the bank statement they have provided it to you is 12756. Okay, and then we can actually put here as the cash balance per the book. And the balance they have given you here is basically 10,218. Those are the numbers that they have actually given it to you in the question. If you actually go back to the question here, you will see that these information are actually provided to you as the opening, as the sort of the balance before any kind of the reconciliation. So 10,218 and 12,756. Okay, so let's take a look at the bank side to see what we have got. We have actually calculated earlier that the deposit in transit is 3784, and the outstanding checks is actually 4634. So we're going to put down here to add back the deposit in transit, which is 3784. And that will give me a balance of 16,540, and then we should deduct any outstanding checks, and the amount in this case is 25. It's basically 4634, as we discussed earlier. So my adjusted cash balance per book per the bank is going to be 16,540 minus the 4634, so that would give me a balance of 11,906. And if you take a look at the balance for the book here, we have already mentioned earlier that there is an electronic deposit that needs to be accounted for in the book. So we should add the electronic deposit, which is the amount is 2596. Again, that's given to us earlier here, the 2596 here. So once you edit, then the cash balance in the book should be 12,814. And then we also need to correct some of the other items that we have not yet been accounted for. So we have not accounted for the service charge that was actually show up in the bank statement here. And the service charge actually is $108. Again, the service charge is showing up in the bank statement that we have talked about here. And the other thing is to account for the error, because the error is they have not deducted enough cash, so they correct the error. So it is regarding to check number 163. And the difference is basically $800. So the total adjustments is $908. So my final adjusted balance would be 12,814 minus the 908. So we would have 11,906. So in this case, we have actually reconciled our bank record and also the book record. Now, normally speaking, on the adjustments that we have made in the book, we do have to make the journal entries to correct them. So that we can make sure that the record actually ties back. So the first thing is definitely the collection from the electronic collection from the customers through the bank. So the entries that we have to account for is definitely on the debit cash, because that's the cash that we have now received. And we have to credit the accounts receivables because we have now collected the money from the customer. So you can reduce the receivable by $25.96. The service charge of the 108 should be accounted for as an expense. So we will be actually taking a look at the bank charge expense of 108. And we will again reducing the cash by crediting cash for the 108. And then we would then have to account for the error. And the error is to do with the payables that we have account for, because we are using that money to pay off some purchases that we have done before. So we would have to debit the accounts payable because we have to reduce the payable by a larger amount of $800. And then we will be crediting the cash for $800. And this should conclude the requirement for this question. And thank you very much.